If you're looking for a few stocks with a relatively low valuation, a reasonable technical analysis, and the potential for 100% gains, you might like the stocks we're going to talk about in this video. Today I'm going to give you a snapshot of 4 different stocks from 4 different categories as well. Keep in mind this is just very brief information, always do your own research. And also keep in mind that these are some stocks that I have on my watch list for a potential swing trade, but as of right now I do not have any positions in these 4 stocks. We're just going to jump right into it, and we're just going to start with the very first stock, which is going to be the Beachbody, which is currently trading under the ticker symbol BODY, Body, which was a SPAC actually. The SPAC was actually FRX, but right now Beachbody is trading under ticker symbol BODY. So Beachbody is currently, could be seen as the Netflix of the fitness world. What they have is a subscription model, so that means they have recurring revenue, and this company is of course very focused on health. And yeah, especially in these times, I believe a lot of people are focusing on their health. Now, we did definitely see a massive jump in users because of COVID, because of the lockdowns. A lot of people were sitting at home and they weren't able to go to the gym, so they were using Beachbody instead. Right now, of course, we are seeing the reopening happening, so a lot of people are going back to the gym and might not continue to use Beachbody in the end and simply will go back to these gyms. But in my personal opinion, I do believe that a significant amount of people is going to continue using Beachbody instead. Now, if you've ever wanted a 3-way, then this is definitely your chance, because this is a 3-way merger between not only FRX and Beachbody, but also between MYX Fitness. MYX Fitness has this beautiful bike over here, which looks a little bit like the Peloton bike, you could say, so it's definitely a competitor to Peloton in that case. What I personally find very interesting is their model, their influencer model, because they have live and on-demand content from these fitness celebrities. And a few of these people are, for example, Shay Mitchell, who has 32 million followers, Arnold Schwarzenegger, who we all know, 21 million followers, and LeBron James with 73 million followers. If we briefly check out the valuation of the Beachbody, we can see that the current market cap of the Beachbody, according to Yahoo Finance, is about $3 billion, so a market cap of $3 billion. And if we go back to the investor presentation of the Beachbody, we can see that in 2021 they expect to have $1.1 billion in revenue, more or less. This is of course expected revenue, so we don't know for sure if this is going to happen, but let's say that they are going to have $1.1 billion in revenue for this year 2021. So that means with a market cap of $3 billion and with a revenue of $1.1 billion, then the price to sales ratio is around 3x, which is definitely on the low end if you look at other companies out there. And also, if you look at the cash position of the Beachbody, they have a pretty solid cash position of around 500 million at this moment. If you look at Peloton, which could be considered to be a competitor of the Beachbody, if you look at the valuation of Peloton, we can see that the current market cap is a little bit more than $36 billion, and their revenue, if you annualize their revenue from Q1 of this year, from the first quarter of this year, then the total revenue for this year, for 2021, would be more or less $5 billion, so that means that the price to sales ratio would be a little bit higher than 7, about like 7.2, 7.3, so that means that Peloton is almost 2.5 times as expensive compared to Beachbody. And also keep in mind that the market cap of the Beachbody is definitely lower compared to Peloton, so I believe that the Beachbody of course has more room to grow in my opinion. And a while ago, I also did a video about FRX merging with the Beachbody. This was back in March 2021, of course. I was talking a little bit about the fair price per share based on the valuation of the Beachbody. And, well, if you want a little bit more information, check out the video that I published back then. But I said that the fair price per share for the Beachbody was between $23 on the low end and $31 on the high end. Then let's look at the chart for Beachbody. Now, we can do a lot of technical analysis on a chart that looks like this, but do keep in mind something very important is that the redemption value is gone for now. The net asset value is gone. Usually for SPACs, the net asset value is $10 per share, because when it trades below $10, you can actually redeem your shares for $10 per share. Now, since the merger has already been completed between FRX and the Beachbody, that means that this floor has been gone. So the floor of $10 per share is basically gone, and right now it can definitely go below that $10 per share. So again, as I've said, we can't really do that much technical analysis, but based on the 1-hour chart, I do think that if we close a 1-hour candlestick above $10.80 more or less, then I do believe we're going to target a move to the upside. The second company we're going to talk about today in this video is Redwire, which is going to hopefully merge with a SPAC that's currently trading under the ticker symbol GNPK. Now keep in mind, of course, since this is a SPAC, we don't know for sure if the merger is going to happen. For example, right now we see some issues with TPGY potentially merging with EVBox. We don't know for sure if that merger is going to happen. So we also don't know for sure if GNPK is going to merge with Redwire, but I do think so. In any case, Redwire is a combination of companies, as we can see in this sheet, so definitely keep that in mind. Redwire is a company that develops and manufactures all kinds of stuff for space, and they also do that for all kinds of different companies at the same time. So in short, you could almost say that it almost looks a little bit like an ETF for space stocks. And something that is very awesome about this company, and something that is very difficult to find as well, is that this company is already profitable. We can see that in 2020 they had $16 million in free cash flow, and in 2021 they also they expect to have positive free cash flow as well. With a revenue of $163 million, they expect to have about $17 million in free cash flow this year. And also the revenue is already pretty solid. As I've mentioned, $163 million is expected to be the revenue for 2021. That is going to scale up very likely in the next couple of years, all the way up to potentially $1.4 billion in revenue in 2025. According to the investor presentation, they are going to have a pro forma market cap of $675 million based on $10 per share. Right now, the stock is trading at $10.50 per share, so it's about 5% higher than that $10 per share. So that also means that the pro forma market cap is 5% higher. So instead of 675 million, it's about 710 million more or less. So if the market cap is 710 million and the revenue of 2021 is 163 million, that means that the price to sales ratio for 2021 would be 4.4x. I also did a video about this company a while ago, back in April this year, of course, and I compared this a little bit with the other space companies out there, and I was giving a valuation, a fair price per share for GNPK, for Redwire, between somewhere of $30 and $40 per share. Some very brief technical analysis for GNPK right now. Again, keep in mind it is still a SPAC, so we do have that redemption value of $10 per share I was talking about earlier on in this video, and that also means that that is a pretty significant support line, as we can also see over here. Right now we are also creating higher highs, so we are creating a higher high compared to this high, which is always good to see. And if we take a look at the RSI, for example, this is still moving to the upside, and also the MACD had a fresh cross to the upside and is still increasingly going to the upside as well. Company number 3 is Opendoor. Opendoor, of course, working in the real estate sector, and here is a platform where you can buy, sell, trade, or finance your house. Now, Opendoor is, of course, operating in a massive market. The real estate sector is, of course, massive. They say they have a superior consumer experience, and they are also the market leader in what they do and are experiencing rapid growth at the same time. We can also see that with their current strategy, their current playbook, they are likely going to have a pretty solid growth ahead in the next couple of years, next couple of decades potentially even. With 4% market share and 100 markets, they could have about $50 billion in revenue at some point in future. According to Yahoo Finance, Opendoor currently has a market cap of about $9.7 billion, and if we go to their shareholder letter of Q1 of this year, first quarter of this year, we can see that they have $747 million in revenue in one quarter. So if you annualize that, if you multiply that times 4, then you're going to arrive at a revenue for the entire year of $3 billion. But do keep in mind there are huge differences between the quarters, so we don't really know exactly what the revenue is going to be for 2021. And also keep in mind, by the way, that the current revenue in Q1 of 2021 is 40% lower than Q1 of last year. In any way, if you have a market cap of $9.7 billion and you have a annualized revenue of $3 billion, then the price to sales ratio would be around 3.3. And also keep in mind that they have a pretty significant amount of cash on the side right now to stimulate a little bit more growth in their company. Currently, they're sitting on $2.1 billion in cash. If we then check out the charts for Opendoor, we can see that we had been trading on top of a diagonal support line since basically the 13th of May. We were above this diagonal trend line over here, but it does look like last Friday we did close below that trend line. We didn't have a lot of volume though, so I'm not entirely sure if this is a breakout to the downside or just a fake out, but that is something we're going to find out this week. And if you look at the 55 exponential moving average of this white line over here, that has been used as resistance resistance all the way through this downside. We saw it being used as a resistance over here as well, over here too, and over here too. So it is very important, a very important level. If we break above the 55 EMA, then I would target a move to the upside. Let's also quickly look at the RSI and the MACD. So the RSI shows some hidden bearish divergence, the RSI going below the EMA on the RSI, and the EMA on the RSI is also trending a little bit downwards. And if we then look at the MACD, we can see that the MACD is still above the signal line, but it could definitely go below that signal line in the next couple of trading days. And then the last stock we're going to talk about today is Pubmatic. This is trading under the ticker symbol PUBM, and Pubmatic is operating in the world of digital advertising, and they, as we can see in the investor presentation, have data centers all around the world. And according to the investor presentation, we can also see that they are working for a lot of ad publishers, which are companies like Microsoft, Quora, the New York Times, and WordPress. Do keep in mind, however, that we have a very high amount of short interest for Pubmatic right now, but also keep in mind that the price targets for Pubmatic are still above the current price of Pubmatic, which is trading around $35 per share. And according to this article over here, the price targets range from like $40 per share all the way up to $64 per share. Pubmatic currently has a market cap, according to Yahoo Finance, of $1.76 billion. And according to the investor presentation, we can see that in Q1, they had $43.6 million in revenue. If you annualize that, if you do that times 4, then you're going to arrive at about $174 million in revenue for the entire year. So with a market cap again of about $1.76 billion and a annualized revenue of $174 million, then the price to sales ratio becomes about 10. Also keep in mind, by the way, that Pubmatic currently has a positive net income, so this company is already profitable. In Q1 of 2021, they had $4.9 million in net income. And if we look at the technical analysis for Pubmatic trading under the ticker symbol PUBM, we can see that currently we seem to be working on a reversal. We were definitely in a downtrend right over here, all the way down to about like $27 per share. But right now we are creating higher lows and higher highs at the same time. So this was a higher low compared to this low, and we are now hopefully working on a higher low compared to this low, but we were also making a higher high compared to this high over here, and this high was already higher compared to this high over here, so that looks pretty solid so far. We did run into some resistance over here, some pretty strong resistance, which was created by all these bottoms over here, all these supports over here. We can see a support over here, here. So that is definitely a significant level between $44 and $46 more or less. We were definitely rejected at that level. And let's then also take a look at the indicators. The RSI is like right now trading below the EMA, and the EMA is curling back to the downside. And if you look at the MACD right now, the MACD is still above the signal line, but it could definitely come down below that signal line in the next couple of trading days. So there you go, 4 stocks that could potentially be interesting for a swing trade or a longer term play. Now I'd love to know your opinion as well. Which of these 4 is your personal favorite? Let me know in the comments. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye!